Tesla stock, which spent most of last week on a downswing, suffered another sell-off early Monday morning, falling by nearly 5%. But by 10 a.m., it seemed that the market's view was moderating, and the stock bounced. It was still in the red as of 11:40 a.m., but only by about 0.4%. So what good news helped Tesla cut its losses Monday? Take your pick, because as it turns out, this is looking like a pretty good news day for Tesla. In fact, if it weren't for the Nasdaq as a whole being down by 1.9% at the same point Monday morning, I kind of think Tesla would be in the green. At least 3 analysts were singing Tesla's praises, you see. Before we get into the news, I would like to welcome you to my channel. On this channel we look at the latest news surrounding Elon Musk, Shiba Inu, SpaceX, Starlink to name a few. I would like to announce a giveaway I will be hosting. I will be giving away a $50 Amazon gift card, and all you have to do is subscribe and like the video and make sure you watch till the end of the video. Now let's get into the news. First, Wedbush just reiterated its outperform rating on the stock, reports StreetInsider.com, and with a $1,400 price target that implies nearly 40% upside in the stock this year. Tesla's launch of Model Y production at its new factory in Austin, Texas, sets the company up to have a massive year in 2022, reports Wedbush. The new production facility will become the centerpiece of Tesla's broader supply ambitions as well as its formal HQ build-out, and could help double the company's capacity to 2 million vehicles per year. At Global Equities Research, the view is similarly upbeat, with analysts saying Tesla is heading into 2022 looking extremely strong, and even more stronger than what we saw on December 28, 2021. Even more stronger. I have to say, that sounds pretty strong. Rounding out the list of Tesla fans Monday is Goldman Sachs. While not quite as optimistic as Wedbush, Goldman does expect Tesla stock to gain about 20% this year, based on its $1,200 price target. Given its leadership position in EVs, and its focus on clean transportation more broadly, given its solar and storage businesses, Goldman asserted Monday in a note covered on thehegley.com that Tesla is best positioned to capitalize on the long-term shift to EVs worldwide. As the company grows in size, and remember here Wedbush's comment on production capacity doubling, Goldman anticipates that Tesla will reap economies of scale sufficient to expand its profit margin. Granted, I don't know that Tesla will be able to expand its profit margins enough to totally justify its staggering 330 price-to-earnings ratio. But when you consider that at a net profit margin of 7.4%, Tesla is already more than 3 times more profitable per dollar of revenue than Ford Motor Company, NYSE, with its 2.1% net profit margin. A further expansion of profit margin still bodes pretty well for its future. Between a price target hike from Bank of America and some very positive news on electric car battery ranges, Thursday should have been a great day to own Tesla stock, but it's not working out that way. Instead of going up, Tesla stock is going down today, falling 4% as of 10:30 a.m. ET and extending a 3-day slide that has already cost Tesla investors 12.5% since the start of the new year. But let's begin with the good news. This morning, analysts at Bank of America raised their price target on Tesla stock to $1,300 a share, as StreetInsider.com reports. On the one hand, the news isn't as good as it could have been, because BofA stuck with its neutral stock rating on Tesla. On the other hand, though, if the banker is right about its price target, Tesla stock could do a whole lot better than neutral this year. It could actually gain as much as 24%. More unambiguously good news today comes out of Michigan, where battery startup Next Energy, which goes by the nickname One, says it has just conducted a road test of a Tesla Model S sedan retrofitted with a prototype 1 battery, and gotten the car to go 752 miles on a single charge. Even more incredible, One's tweaked Tesla accomplished this feat in the ice-cold month of December, when rechargeable battery performance is usually at its weakest. A third-party tester validating One's result, using a vehicle dynamometer, presumably not at outdoor temperatures, was able to achieve an even more incredible 882-mile range for the car. Now, that all sounds like fantastic news for Tesla. From an investing angle, one investment bank thinks its stock is worth a lot more than it costs today. From a business angle, another company has independently come up with a battery that, if produced at commercial volumes, could dramatically increase the range of Tesla's cars. Granted, that might come at the cost of some profit margin for Tesla, if it needs to license One's technology to achieve the range improvement, rather than building its own batteries in-house and with partners. But if the upside is eliminating car buyers' range anxiety about electric cars once and for all, I suspect it would be worth sacrificing a point or two of profit margin to do that. Sadly, Tesla stock isn't reaping any gains from today's positive developments. Instead, its stock is continuing to crumble along with the rest of the growth stocks on fears the Federal Reserve's planned interest rate hikes will kill the bull market in stocks. It just goes to show, sometimes, you can't fight the Fed going up or going down. Shares of electric car maker Tesla are kicking off the year with a bang. The stock rose as much as 10.7% on Monday morning. But shares were up 9.2% as of this writing. The stock is trading sharply higher after the company announced better-than-expected fourth-quarter vehicle deliveries. It's not surprising to see shares of the stock rising sharply on this news. Not only does the strong quarter give substance to the stock's frothy valuation, but it also suggests that the company started off 2022 at a high production rate. Extrapolating from the production numbers Tesla provided for its fourth quarter of 2021, the company is producing vehicles at a run rate of more than 1.22 million annually, setting the company up for another year of strong growth. Tesla took a tumble along with the rest of the tech stock market this afternoon, succumbing to interest rate fears after the U.S. Federal Reserve made public its plans to withdraw support from the high-flying U.S. stock market. As of 3:25 p.m. ET, that decision has cost Tesla stock 5.5%. CNBC has the story. From just published minutes from the Fed's December meeting, it's apparent that officials are ready to dial back policy help aggressively, in particular, by first slowing then reversing bond purchases, i.e., selling off bonds already purchased, in the coming months. The Fed's goal isn't to engineer a stock market crash, although that may be the effect, but rather to dry up excess liquidity that is accelerating inflation in the economy and to raise interest rates in an attempt to dial back that inflation. As previously reported, the Fed also plans to raise targeted interest rates 3 times in 2022 and then another 3 times in 2023, and then another couple more times in 2024. Number of times multiplied by 1/4 point per each raise works out to interest rates 2 years from now that could sit 2 full percentage points above the 0 to 0.25% rate that is targeted today. Interest rates could thus rise 10 times in 3 years, or just 2 percentage points, depending on how you look at the numbers. Right now, investors are looking at them the first way, and they're downright scared of what this might do to the stock market. They're scared enough, indeed, that they're ignoring the fact that 3 separate analysts, Barclays, RBC Capital, and Mizuho, raised their target prices on Tesla stock today to $325, $1,005, and $1,300, respectively, according to a report from thehegley.com. Instead, they're heeding the advice that worked so well for growth stock investors in 2021, don't fight the Fed. Of course, last year that advice meant, go ahead and buy stocks regardless of how insanely overvalued they look. Today, in an environment where the Fed is not implicitly promising to ensure that stock prices only go up, that same advice has a different meaning entirely. Take a closer look at valuation, and if a stock costs 330 times earnings, as Tesla does, then sell. That's it for today. I hope you enjoyed. I would appreciate it if you could subscribe and like the video as it will help out the channel a lot. Make sure you do not forget to turn on notifications by pressing the bell icon so you do not miss the latest news surrounding Elon Musk, SpaceX, Starlink to name a few.